Now, it's been a busy week for Nigeria's United Bank for Africa. Earlier this week, it opened its Kenyan operation, and today, at an extraordinary general meeting, shareholders overwhelmingly endorsed the bank's aim of raising 500 billion naira through a corporate bond. Now, the bank says it will use the money for infrastructure funding, acquisitions, and to consolidate the bank's channel and IT network across Africa. Well, live from our Lagos studios, we are joined by Victor Osa-dolor. He is UBA Chief Financial Officer to chat about this. Victor, good afternoon and welcome.
Good afternoon, Godfrey.
Victor, you guys are coming to the market, or at least you have said you want to come to the market, and you're looking for about 500 billion naira. I was just doing the calculations a few minutes ago, and it comes up to about $3 billion US, which is a lot of money by any count. Now, will you actually raise that amount in full?
Well, it's a two-year program. It's not. We're not planning to raise 500 billion in one lump sum in the next 3 months. That's not the plan. It's a two-year program. We're going to have them in tranches, and we are hoping that the first tranche, which is going to be about for 50 billion, we will be coming into the market for that shortly. We've received we've received approval from our shareholders at an extraordinary general meeting that was held last week.
Oh, that meeting was held last week. It wasn't held today.
I didn't get that point. What did you say?
Okay, now I was just noting that that meeting was actually held last week. It wasn't held today. Okay, now you are coming to the market. This will be your first bond. Your statement also says yes, you are looking at a combination of share sales as well as a bond sale. Now, just how much will be in bonds and how much is going to come from the capital raising is going to come from share sales?
Okay. The total program, as I said, is 500 billion. 100 billion would be by way of shares, and then the 400 billion would be coming via bonds. The 100 billion by way of shares is largely through private placements, and then subsequently would plan to also be listed on the main board of the London Stock Exchange. So that's for the 100 billion. Then for the 400 billion, which we are going by way of bond, as I said, that will be staggered over the two-year timeline, with a 50 billion bond in the first tranche.
So you're going to go to international capital markets as well as the Nigerian markets for these bonds? No,
for the bond is principally in the local market. And it's also instructive to note that it's a naira bond. It's a naira bond. I would think the market is quite deep enough to be able to take up to 50 billion at this time.
I was going to take you up on that because we also have two other banks that have announced plans to try and raise money from the bond market. We've got Zenith as well as another bank which I can't recall right now. But in total, we're looking, before you guys came in, at about 700 billion naira of bonds, which is a lot of money by any account. And the Nigerian bond market is not that deep, is it?
Well, I don't think any one of these banks is going to come out and raise the entire several billions of naira in one lump sum. That's not the plan. I think each one is going to go through this kind of program that we are also going through. Therefore, I don't think the market is going to be oversaturated. As I said, out of the 500 billion, we are one of the biggest in terms of this particular exercise. And out of the 500, we're only doing about 10% at this time. I also believe the other banks will be going through that kind of plan. So nothing to worry. We are doing only 50 billion, and we have a very strong brand. And so we are quite clear that just the way our share price is performing in the market, this bond would also do well as it relates to UBA.
You're raising the money at a particularly interesting time because we've seen the central bank coming in with those reforms and taking over some of those banks that were deemed to be inadequately capitalized. Now, that of course raises the question of who you are looking at in terms of acquisitions potentially. Are you exclusively looking at Nigeria? Are you looking beyond Nigerian borders here?
We are experts when it comes to acquisitions. If you recall, when the first consolidation exercise was done in Nigeria, we were the first to announce a merger. And since then, we have gone ahead to acquire a bank in Burkina Faso. We have also acquired another bank in Benin Republic. So we are constantly in the market. We don't have to wait for regulatory changes. We believe that at any point in time, there are always opportunities. And as I speak to you right now, there are opportunities both locally and internationally. But we're doing our due diligence at this time. So we are looking both international, essentially we're looking also very extensively at the international market. We believe that in some of the markets where we are playing today, that there are opportunistic acquisitions for us in those locations.
Now, you opened your first office in Kenya earlier this week, and one wonders, though, whether your focus is going to be simply Eastern Africa, or you're also looking at Southern Africa, where, of course, we know the big South African banks are operational, and they will pose very stiff competition indeed if you dare to come in there.
Well, we opened an office in Kenya this week. We are looking at Southern Africa. We already have plans to be in Zambia, in Tanzania, and plus the Kenya where we are. We are not coming to South Africa properly yet. I mean, at the right time, we'll be there. But I mean, we believe that there are opportunities in Angola because it's part of our plan. We believe also that that particular opportunity is something that we would like to take advantage of as quickly as possible. So Southern Africa does have its own opportunities, but we are moving in a very strategic manner across Africa. We have stratified Africa along 4 lines: oil-producing countries, mineral resource, rich countries, politically stable countries, and then others. So every single time you see us in any part of Africa, it is in line with the strategy that we're playing out.
And you're also looking for infrastructure funding with these bonds. You want to try and see if you can get into the infrastructure space. We have seen that line being taken in Kenya, where that government raised an infrastructure bond. Which part of Africa would you be looking at in terms of infrastructure funding? Is this just for Nigeria?
Well, we'll start from where we know best. We know Nigeria very well, so the first place we would like to pursue that line of activity would be in Nigeria, of course.
Okay, and so when you announce, of course, a big capital raising exercise like this one, at a time when you have banks in Nigeria that have been deemed to be inadequately capitalized, one immediately assumes, of course, you might be looking at your own home market. Is that the case, though?
Well, I didn't quite hear you well, but let me say that
I'm just wondering if you are looking. I was just wondering whether you are looking at some of those banks that we know have been identified by the central bank as being inadequately capitalized. I'm just trying to narrow it down.
For what purpose?
For acquisitions.
Oh, well, as I said, we haven't, I believe that central bank is turning around the banks at this time. So for us at this time, why are we going for additional capital? For us, essentially, we are not looking at Nigeria alone as the platform on which we're playing. We are present today in about 16 countries. And each of these 16 countries, we want to really do the kind of business we've done in Nigeria. And we want to be able to acquire significant market share in some of the countries, in these countries where we play. We today have a capital adequacy ratio of about 15%. We think to play in these countries will require a minimum of about 20%. And that's why it's instructive for us to do this particular capital raising at this time. And why debt and not equity, mostly? We're doing debt because we want to be able to leverage the equity capital that we have. If you look at our balance sheet structure today, our capital structure is largely tier 1 based. And we think this is the time now to move in and bring in a little bit, some amount of tier 2 capital to make our capital structure a lot more efficient. So that's why we're doing this. We believe it's important that if you're playing in Africa, you should be more than adequately capitalized. And this is also consistent with Basel II. The Basel II, requirements and the changes that are going on will require, that you are able to have significant amount of capital to play in high-risk geographies like South Africa, Sub-Saharan Africa.
Sub-Saharan Africa.